Hi, great to have you here. I'm Janne Muta, Chief Market Analyst for TIOmarkets. In this video, I'm going to talk to you about Bitcoin and Tesla and New Zealand dollar versus Japanese yen currency pair. If you want to know why these markets are bullish or bearish and where the key levels are and how you can define if the markets are moving up or down, just watch this video. If you like it, share it with your friends and give us thumbs up or leave us a comment. That would be really, really nice. Thank you. Hope you find this helpful. Watch this video only if you agree with this disclaimer and with the fact that we don't provide any investment advice. Let's take a look at Bitcoin. April 26th, I wrote an article and I said basically that this market, after moving so much and moving bullishly above the 50 period moving average, was quite different at the time. And it still is, by the way. So what happened was that the market created this bearish wedge and broke below it. Yeah, that's not bullish, right? So at the time I was pointing to this zone here around 23.6 Fibonacci retracement and the moving averages and saying that the risk is that the bulls take money off the table in the zone and the bears take advantage of this potential weakness. So let's go and see what actually happened. So here's the market. I'm going to replay this quickly to you so that you get a flavor of what was going on. Rally into the zone. Reaction, attempt to stay above the zone, another one, and here we go again, another attempt, and another failure. So the market came down. So where is the market now likely to go, and what are the key zones? Okay, first of all, we have to remember that we are dealing with a market that has been running higher very, very fast for a long period of time. And every market comes to a point where it can't go higher because you always need somebody else to buy after you. And at some stage, you know, that's just, there aren't people who are greater fools. You know, the greater fool theory, that if you buy, you need a greater fool above you to actually buy so that you can make a profit. Anyway, so here we are, the market trading at levels that it kind of bounced from this 50% Fibonacci retracement level and created a rejection candle. So basically we have some indications that there are some die-hard bulls in this market still looking to buy this market even after the negative comments from Elon Musk. He was pointing to the fact that there's so much pollution created by the coal because this market is basically, it only exists because there is this blockchain system that needs a lot of electricity, and then those people who generate, who do the mining, they go to the place in the world, to the places in the world where the electricity is the cheapest. So it's usually the coal, often in China, and it's polluting this world. So looking at this market here, I'm seeing some factors that could still point to higher prices, but I have much more reservations on this market than before. Let's see what should happen in order for this market to stay bullish. So first of all, I'm going to draw a couple of channels here. Let's take from that low to this low, and we can see how the market came almost down to this same trend line again, but then bounced. So it gives you some validity for this idea that you should connect those 2 points. And if we go up here, we can see that there is some upside to this market, but if we choose the latest high, then the upside is much more limited. Depending on the way you want to do this, it's either or. Anyway, the fact is that we have lower highs in this market. We have one significant lower high after this, and in order to negate this message of this lower high. We need to break above it. So basically there is this high at 59,686 and the market needs to rally above it. This basically tells you that there are people who still want to take this market higher, but where is the next significant resistance? Actually, I would argue it's somewhere here. We have the same zone that I drew earlier in that analysis. It is still very valid. We have the moving averages there. We have 23.6 Fibonacci retracement level there. And we are getting close to the channel high. And just to give you a flavor of, a lot of people do things differently, and in the markets that's true also. So some people might actually do this. They might actually take a look at this reactionary high and this reactionary high and think, oh my, that's actually in the same vicinity as the 50-period moving average. So fairly close. So I promise to tell you what needs to happen in this market in order to make it bullish again, and it is something like this. I think it's likely that the market rallies up to this green zone. I don't know if it goes as deeply as this arrow, but it's likely to rally somewhere here. So obviously the market just could keep on moving higher. That would be great. And then it moves and comes down a bit and then creates a higher low. So that would be very significant. That would tell you that bulls are ready to buy at higher levels and bears are giving in. They're just giving up. So that's the bullish scenario. The other option is that the market reacts to this zone and creates a lower high. And then the question is, because we have reactionary high there, a lower high and another lower high, is this market gonna go deeper? Then it's more likely that it's gonna go to the next zone. And let me get rid of these. I wanted to have only this line here. There is obviously support here, but that's more likely to break if you get a lower high. Let me get those out the way, just for the sake of clarity. And why would this zone be interesting? Why would that be relevant? The reason is that we have this high here that used to resist prices, so it's now likely to be a support. We have 61.8 Fibonacci retracement level here, and the channel low is not too far either. So we have a zone there. And if the market breaks this low after creating a higher low, then it's likely to move down here. So these are the two scenarios I'm seeing with this market. There are regulatory risks. There was some talk that the state of New York is going to ban mining in Bitcoin for 3 years. That's the plan. I'm not gonna speculate if that's gonna go through or not. There are China is creating their own cryptocurrency. UK is looking into it, into something similar, and so is the Fed. So there's a lot of talk that there might be some other sort of governmental cryptocurrencies or electronic currencies coming up, and that would be obviously competition for Bitcoin. But that's not the only competition. There's Ethereum, for instance, which has much more sophisticated code, and it's attracting much more money at the moment. So Bitcoin could be one of those old school things that fades away bit by bit. But again, all these factors are just they're just factors. We just have to see what the market does and what the market thinks about them. And the only way to figure out what the market is figuring out is to look at the higher lows and lower highs and price action, because that tells you the market's opinion. As we all know, Tesla isn't the only game in town anymore when it comes to electric vehicles, and you can see that in the stock price. So basically the market was rallying for quite some time. People used to think that this is going to the moon and there's no other option or no other direction for this stock. Now, however, a couple of things have happened. It sold off heavily, then it created a lower high. And if we use a sort of channel analysis, we can get an idea where this market might move to. But first of all, let's pay attention to this low here. It rallied the price higher quite a bit. So it's a significant low. It's a significant support. And as you often know, if the market comes down to levels like this, it might bounce. So if that happens, then the next relevant zone is up here. That's where we have quite a few technical factors coming together. We have the channel high, we have this rising trend line support that is now likely to be resistance. We have a recent support here, and we have both moving averages 20 and 50 period inside the same zone. So this zone is from, let me give you the numbers, from about 657.35 to 694. And if the market can't penetrate this and it moves lower, if it just starts to roll over and moves down, then there's a bigger likelihood of market violating this support. This support, I'm going to give you the exact number here. The support is 539.73. Now, if that's the case, if that gets violated, then the next interesting zone is down here. And this is basically because we have this level here that used to resist the prices. The price couldn't move higher, and we have the channel low here. So I wouldn't be surprised if the market moved here. Obviously, the angles of the arrows, somebody might say, how do you decide what the angle is? I really don't. I don't know how quickly the market can move to a level. These are only approximations, just to give you an idea how the market might move and what's important if it does. Another reason why this zone here, or roughly this area, is important is because we have the 50% Fibonacci retracement here. So obviously we could stretch this zone a little higher to meet the 50% there too, or highlight the fact that the 50% Fibonacci retracement is there also. Okay, so this is the bearish scenario in this market. What if the market just rallies higher and doesn't come down? Then it moves outside the sort of downward pointing trend channel here. So what might happen after that? Then we would have a pretty good solid base here. Then we would have double bottom and the market breaking significant resistance areas. Then I think there's a good chance that we move to 779.40 or maybe even higher to the recent highs. So as always, these are only approximations and ideas of what might happen in the markets, so don't take these as predictions or investment advice. New Zealand dollar, Japanese yen trending higher, as you can see. A series of higher lows and higher highs. So all is looking good. We have moving averages pointing higher. 20 period is above the 50 period. And as this is the daily chart, that's quite significant. We have some resistance here around 79.38 area, which obviously has to be penetrated in order to make it to the higher levels. If the market keeps on making the higher lows and doesn't violate this channel low, then it looks like we have about, say, almost 2% upside here before we hit the channel high, depending on how quickly we get there. But that obviously doesn't have to be all the upside there is in this market. It is just the very near future. Now, if this gets broken, then it turns more negative, and then we have to reevaluate this currency pair or the price action in this currency pair again. Thank you for your time, and I look forward to seeing you on the next video. If you want to learn more, come to TIOmarkets.com/webinars, and I'm more than happy to teach you to become a better trader. See you soon again.